Hello everyone, welcome to the Ashworth Wealth Weekly Market Update. My name is Todd McChesney. I'll be covering this week's economic information. Let's go right to the slide, kind of go over a couple of different things. The market has absorbed a lot of news pertaining to both sides of the Fed's mandate. Their mandate is basically we want full employment and we want to slow down inflation. The payroll job growth did decline in June and the unemployment rate ticked down from 3.7 to 3.6. However, wage growth remained at about 4.4% year over year, so it didn't really add to or diminish any fears of wage inflation. Retail sales in June added to a picture of a resilient economy. We expect that to continue, but the other part of the mandate on inflation, that does continue to decelerate. We're looking at core inflation at about 3%, 4.8% year over year, respectively. That's not bad. It's getting better, back to where we want it to be. It does look like we are going to have another rate hike this week of about 25 basis points. If you remember, we didn't have a rate hike last month. It does look like this might be the last one. There's about a 96% probability of most people feeling that this is going to be a rate hike this week. And if that does, then most people will expect that might be the final one of the year. We'll look and see. However, if you remember how rate hikes work, they usually go up on escalators, and when they realize that they're kind of gone up too fast, they reduce the rates the following year or two by taking an elevator. So they go a lot faster down. A lot of people think that next year you could see 1.25% as high as a 2.75% decrease in interest rates. So we don't know exactly where that's going to end, but the good news is as interest rates do go down, markets tend to do very, very well. The market has pretty much overcome and been able to maintain itself during these rate hikes over these last 16 months or so. And so we've seen that go pretty well. We expect long-term success with most asset classes as rates continue to come down the road. So hopefully this is what we see. We'll see one more rate hike this year. We'll continue to follow it and we'll kind of keep you posted. And if hopefully things go as we expect, we'll start to see some rate decreases. Those of you who have new mortgages, you can maybe refinance those mortgages at a lower rate, hopefully sometime next year, and that'll also hopefully help the market continue to its growth pattern as people can borrow money and expand their businesses, etc. Thank you for watching. Feel free to forward this to any friends or family members that you have, or you can give us a call. We can add them to our weekly distribution list, and we'll see you next week. Thank you.